Welcome back. The biggest story in the Nigerian financial space is today's deadline for some over 100 ministries, departments and agencies to comply with the federal government's directive to operate a Treasury single account with the Central Bank of Nigeria. So from today, there will be a unified structure of government bank accounts that gives a consolidated view of government cash resources. Well, joining me now to talk more about this is economic analyst Henry Boyo. Good morning to you, Mr. Boyo. Thank you so much for coming through.
Thank you, Harriet.
So it's interesting times for the banking sector. The deadline for the TSA implementation expires today. There's no extension. There's no further extension for the banks or for the MDAs, as the case may be. Now, over 2 trillion naira is supposed to exit the banking system. Do you think this puts banks in troubled waters?
Thank you, Harriet. You're right. The TSA concept started much earlier than this. I think it was in 2004. But unfortunately, for one reason or the other, the adoption has been delayed until, I think, 2014. But prior to this, I must give credit to the government. They had in place, they had been working on the TSA adversely between 2012 and 2015. They created the integrated payment systems and also the general information, integrated general information system. But in reality, the banks should not, in my mind, should not be unduly worried. For a very simple reason. You know, when the central bank raised the cash reserve ratio for government deposits to 75%, the banks initially cried and said so much money would be taken out of the system and there would be less liquidity. But I think as soon as they saw that nothing like that happened, that the 75% withdrawal of government funds did not affect their operations, life went on as usual. So if 75% of government deposits which have been withdrawn from the system did not create the kind of liquidity fears that are being speculated at the moment, then I don't see that 100% would do much damage either.
But, you know, we're expecting that if this public funds, you know, are totally taken out, then there maybe should be a review of the cash reserve requirement for even private sector deposits as well, to kind of give them, as banks, a soft landing. Do you share the same view?
Well, I am impressed by your sympathy for the banks.
Yeah, because believe it or not, they are the ones who are supposed to provide liquidity, especially for the real sector of the economy, where, you know, a lot of times we've heard cries about interest rates being too high, and so they can't access loans from the banks, and even, you know, trying to get loans from the BOI. There's so many challenges of accessing finance for real sector.
Yes, that's why I say I'm very impressed by your sympathy for the banks, because you will probably not be able to confirm that banks have been actually supporting the real sector. If anything, most of the banks have been living on government borrowing. So it's not that, oh, we should be sorry for the banks, they wouldn't have liquidity to. When they had plenty of liquidity, how much went to the real sector? The liquidity, in spite of the liquidity surfeit, the government itself had to start intervening with funds. And, you know, that is a little bit of a contradiction if you didn't see it. If you already say you have excess liquidity in place, it doesn't help your case if you similarly also start putting in more funds into a market that is already too liquid. So you have a situation where the media, particularly those who do not understand, do not find it contradictory that the government is crying on one hand that there's too much liquidity in the system, and on the other hand, they're saying that there's no money to go to the real sector. While the banks are saying, thank you very much, government, we are very happy you're on our side, because we know that at the end of the day, you know that there is excess liquidity because you are going to borrow some money from us on a regular basis. And you know, the interesting thing is that the issue of this of excess liquidity must be seen in true perspective. You cannot have a situation where the central bank itself has predicted and projected that within the next 2 months or so, they would be borrowing or they would be mopping up 800 billion naira of excess liquidity. I think this information was announced on this station some time ago. That should be an admission that they recognize that even after the TSA has been operated, fully implemented, there will still be a liquidity surfeit. That should teach you something to say, what's going on here? You know, because as I said, when 75% of government deposits were taken out, there wasn't much of a problem. The government still continued, the central bank still continued to mop up excess liquidity.
So in mopping up excess liquidity now, where does that, because the banks are still complaining that they don't even have enough, but then the central bank is going ahead to do OMOs and to do, you know, primary auctions and the rest of it to ensure that liquidity isn't as excess as we'd like to put it. But then again, there's still concerns about the fact that this will kind of more than impact on the bottom line and the top line for most of these banks.
It would. Excuse me, it might, no doubt. But I think she should be more worried about the impact on the real sector that creates jobs and drives the growth of the economy. As I say, and probably you didn't hear very well, the government itself has decided, or the central bank itself, as part of its policy for the next 2 months, will be borrowing 800 billion naira, money that they don't need, and they will be willing to pay 13, 14, 15%. I don't think I need to make a case again as to, you know, the fact that there is...
Yes, because you consistently talked about this.
No, apart from that, the government accepts that, or rather they have projected that in the next 2 months they are going to borrow 800 billion naira, money that they don't need, but money that they are willing to pay 10, 11, 12, 13, or even 15% interest on. So you should wonder whether or not the government itself accepts that withdrawing of government funds or government deposits from the system would affect the situation, the liquidity situation. Obviously not, because it still sees ahead in the next 2 months the need to pay 15% or more to borrow funds from within the system to sterilize the funds. So you can't be in that breath also talking about excess liquidity being a problem for the banks. I don't know if you understand where I'm going.
Well, let's talk about the expected constraint on liquidity. You already started talking about the real sector. Let's speak more about it. The effect this will have on the real sector, borrowing to the real sector.
It wouldn't change. Excuse me. The banks have never been in favor of lending to the real sector because they have a good Father Christmas that comes to borrow money from them on a regular basis. Father Christmas in the sense that the government itself accepts that it's borrowing money it doesn't need and is willing to pay 13, 14, 15% for it. If you are a banker and you had the choice of either lending to government, whom you know would always pay you your money, and government is prepared to pay you an interest of up to 15%, especially when you know they don't need the money, and then you have the other choice of the real sector, whom you have to lend to, and at the same time, you expect that the real sector will be able to pay you in spite of all the problems, the challenges they have with regards to, you know, apart from cost of funds, with regards to all sorts of infrastructural limitations and legislation and taxes and, you know, all the encumbrances that the real sector has. You would, as a banker, look back and say, it's better to give my money to government because I know government. So long as, this is why I emphasize that 800 billion naira is a lot of money. You cannot say that there is no money in the system for the real sector to operate, but meanwhile, you have projected, consciously projected, and made plans to borrow 800 billion naira, which you're not going to use to build hospitals, which you're not going to use to build schools, which you're not going to use to build roads, which you're not going to put into any productive enterprise, but you're willing to take out of the system, and in the same breath, you say, there is no liquidity in the system. So we have to be very careful about, you know, what they tell us and what the reality actually is.